Hello there, I'm Daniel Lader, founder of Lader CPA and Associates, and welcome back to our Instagram Live series where we are talking about building a successful private practice from beginning to infinity. So, welcome back, and as you know, we need to start with that all-important question, why did the therapist admire the accountant? Because they could turn emotional breakdowns into financial write-offs. So remember, the jokes, they just keep getting better, so tune in for those. But this week, we're going to be talking about estimated taxes, what they're for, how to handle them, and how to calculate them. So let's jump right into it. First, what are your estimated taxes? Well, as you know, the IRS likes to get your money, and that's it. But more in detail, the IRS does want you to pay your taxes before April 15th, if that's when they're due. They actually like it so much that they have set up estimated quarterly tax payments that can be made throughout the year. Now, estimated taxes are meant to cover the income tax and the payroll or self-employment taxes that you incur during the year. And I guess we have fireworks for now. But that's what your estimated taxes are meant to cover. Now, unlike an employee who gets a paycheck and has taxes withheld every paycheck, self-employed people need to make these payments themselves. And we'll talk a little bit more about them, but that's the idea. You're prepaying your taxes for the year. Now, who needs to make these payments? Not everyone. First off, for the tax year you're in now, if you expect that you're going to have to write a check to the IRS for $1,000 or more in the following April 15th, then you're going to need to make estimated tax payments. A lot of private practice therapists are in this category. They're probably going to owe something to the IRS. So that's where the estimated taxes come in. Now, some of the therapists out there, you may also have a W-2 job or you have a spouse who has a W-2 job and there's plenty of withholdings coming off of their paychecks. Then you might not be in that situation where you need to make estimated payments. Now, as far as looking more into the situation, talk to your tax preparer, talk to your tax advisor, get their input on what you need to know and how you need to do it. Now, there's two ways to determine what you're going to need to pay to the IRS. First off, in order to avoid any kind of penalties, there's two methods, the 100% method or the 90% method. I'll get into both of those, but first let me talk about those IRS penalties. These, if you miss all of your quarterly payments and don't make any estimated payments until April 15th, don't be too concerned, too upset. Yes, there will be penalties, but they're not ruin your life sized penalties. They're just more of the annoying sized penalties. But that's just in case you're missing those payments. Now, those two rules, the 100% or the 90% rule, what that means is during the 100% rule is you look at last year's tax return, you look at the total amount of taxes, not what you have to pay on April 15th, but what the total taxes were before any payments. You look at that number and you take 100% of that number or the whole thing. And that is what your estimated taxes need to total up to for your current year. If you do that, if you make 100% of the amount of your last year's taxes, you'll avoid those underpayment penalties that I just mentioned. The second rule is the 90% tax rule. This one's a lot harder, and this is where you'll need your tax advisor to help you with. Instead of looking at last year's tax amount, you look at this year's expected tax amount. You come up with 90% of that, and if you've paid 90% of that amount, you won't have any penalties. Now, that 90% rule, that's a lot harder to figure out. A lot of people just use that easy 100% of last year rule, and that's perfectly fine. Even if the 2 years have a big difference in whatever the income was, If you met that 100% rule for last year, there won't be any penalties. You still might have a big chunk that you have to write in April 15th though. So the quarterly payments, the estimated payments, are still worth looking at, even if you're not expecting to have penalties. A lot of you have probably heard that simple rule of thumb for the self-employed: set aside 20-30% of what you earn, put that aside in a separate bank account, so that when you are ready to pay taxes, it's already there and you don't have to scrounge to get that money back, or to collect that money to pay. And that's a good strategy. I recommend doing that, especially if you have not yet talked with your tax advisor about what amounts you should be paying for your estimated taxes. Now, when do you need to make these payments? There's 4 dates that the IRS has set out: April 15th, June 15th, September 15th, and January 15th. That's right, 2 weeks following the end of the tax year. Those 4 dates are when estimated payments should be made by. If you make them on those by or on those dates, you're going to reduce or avoid any of the penalties the IRS might assess for those payments, for any underpayments. So those are the big 4 dates. You'll notice they're not all 3 months apart. April to June, that's only 2 months. June to September, that's 3. September to January, that's 4 months. And then January to April is 3 months again. So they're not exactly quarterly, but those are the dates the IRS has set aside for those quarterly payments. Now, how to make the payments, that's an important one. You can always mail a check to the IRS, ask your tax advisor to help you get the payment coupon, the 1040-ES form, to fill it out, put in the number, and mail it. That's not the fastest way. You can go onto the IRS's website and they have a direct pay option where it will link straight into your bank account. Come on, this is the modern age. We know how electronic payments work. But all you'll need to do is jump on the IRS's website and make that payment there. Also worth remembering, some states might require quarterly payments too. They all have different methods, but most of the ones I'm familiar with, they do have a website and online payment method. So that's another thing to be aware of. Now let's talk a little bit about how your payment is calculated, how your estimated payments are calculated. First off, we are not looking at a simple situation anymore. Let's look at a taxpayer who they've got a W-2. They've got a spouse with a job. They've got their business, their practice that's generating income. Overall, we can look at those things for the current year and know what your tax could be, should be, estimate of what your tax would be, and then work off of that. But you don't want to just go off of that, because there's already withholdings coming out from those W-2s we mentioned. Maybe you've already made an estimated payment during the year. That has to be factored in and reduce the future amounts to be paid. Maybe you had last year's refund instead of coming back to you as a check. Maybe you've had last year's refund applied to next year. So that's in there too. So you're not just looking at what that tax amount is and then dividing it by 4 to get your quarterly payments. You're looking at the tax amount minus W-2 withholdings, payments already made, refund if it was applied from last year, and then that's the amount that you are dividing by 4 and then mailing to the IRS. Now, one recommendation I love making, because honestly, I don't like writing a big check 4 times a year. That's a little hard to do. What's easier, and when you work with your tax advisor, they can help you with this. When you have your business set up with payroll, if you're an S-Corp, you have payroll already. That's a requirement. Have your advisor work on adjusting the amounts withheld from your paycheck. I'd rather pay a smaller amount 12 times, 24, 26 times a year, instead of a big amount 4 times a year. It's just easier to do. It hurts less to send that money away. So that's one thing to consider. The withholdings from your paycheck, it goes to the same place those estimated quarterly payments go. So adjusting your paycheck versus making those payments, that's something to look into. Talk with your advisor about that. Now, I mentioned a little bit about the penalties that the IRS has. This is called the underpayment penalty, and it sounds a little bit grabby to me, honestly. But the IRS says if you're not making those estimated payments, they're going to charge you a penalty on that. Now, as I said at the beginning of this, that penalty, it's not a break your back penalty, it's not a ruin your business penalty, it's more of a frustration and annoyance penalty. The rates are not high, but they're avoidable. So, as I said again, you can look at either the 100% rule or the 90% rule to know what amounts to pay to avoid those penalties. So we're nearing the end here. So the things I would like you to take away from this is, first off, if you have your own business, you need to be making estimated payments, either the quarterly payments or payroll withholdings, whichever is preferable to you. But you need to be making those payments, one, to avoid those annoying penalties, and two, so you don't have a big check due on April 15th. No one likes that. So it's a way of spreading out what has to be sent. Second, setting aside a little bit of money, somewhere between 20 or 30%, will help out, and talk with your tax advisor so they can give you a more accurate number of what should be set aside for future taxes. Now, if you have any questions regarding this topic, feel free to DM me, comment on this video, and I'll be happy to answer any questions as I'm able to get to them. My firm is offering our Financial 360 service. If you'd like to schedule a free 30-minute call to talk about that and see how my firm can help you in your situation, go ahead and DM me, ask for that meeting invite, and we'll send it to you and get you on the calendar. I'd like to ask all of you to go ahead and follow and subscribe so you can be aware of future events and get more tax advice from us. Also, go ahead and visit our website, latercpa.com. I will see you all on the next video. And remember, have a great weekend and keep helping others to help themselves. Bye-bye.